Hey, welcome back to the show. I'm so glad you are here. I love joining you each and every time we come back on the program. Love it, love it, love it. Today on this episode, I'm going to talk to Jim Tewell of EPS Wealth Management, and we are going to talk about the stock market. What should you know about the down market right now? Should you be pulling out? Is that a thing that you should be doing? What happens if you're close to retirement? How is that affecting you in the stock market? Or is there a strategy out there that can work even in a down market? So we're going to be talking about ways to build your wealth with Jim Tewell of EPS Wealth Management on today's episode. So I hope you learn a lot on today's show. And please always go visit the website at theambermayshow.com. And while you're there, please consider becoming an angel investor, $5, $10, $20, whatever you have that you can give to the show. That would be so helpful because it takes money and time and effort into doing these broadcasts. So if you can become an angel investor, if you believe in what I'm doing, I'd appreciate that. You just hit the donate button on the website and that would be so fantastic. While you're there, check out the resource tab. I have a lot of information that I share on the resource tab, and go visit the merch on the website. On the merch, there's a merch place, and I got these great cups. I have one of my listeners. I'll show you that. Check this out. One of my listeners went on the website and got a cup. Got it from the Amber May Show. So make sure you go to the website, grab a cup, grab a shirt, and so I appreciate you, Tom, very much. Or the old man, which we nicknamed Tom, the old man. So anyways, you could grab a cup there or a shirt. Make sure you like, share, and subscribe. I would really appreciate that. Like, share, and subscribe, especially this episode, because maybe our friends need some information about the stock market. So up next is Jim Tewell, and we're going to talk about how the stock market is going to affect you and how you could still build wealth possibly, even in a down market. I'm so glad to have you back, Jim, on the program. You're from EPS Wealth Management, because I want to educate my listeners and viewers about the market. So welcome back to the program.
Well, thank you very much. I'm excited to be here. The market is not very exciting right now, obviously, but it is the stock market. It does go up and sometimes it does go down.
See, there's not really a formal place we can necessarily go for, at least for the masses, to understand how to make our dollar work for us, how to build wealth. So someone like you can come in and coach us on best ways to invest our money and teach us different strategies that are out there. And so today I want to focus on the market because it's one way people use to grow their wealth and to grow income for themselves. And with the market down the way it is, what are you suggesting to your clients as we look at how the market's performing right now?
Easy question. One of the things that I learned over the years, I've learned from mentors, and I think it's important if you're going to be in the market, if you're going to do anything, is to find people that have been successful at it and learn from them. And one of my mentors was a guy by the name of Ted. He retired as a vice president from Smith Barney years ago, came out to Sun City and retired. And my mom's best friend of some 40 years was a gal that married the boss. She went to work for Ted somewhere along the line. Actually, my mom worked for Ted, and this gal worked for Ted, but this gal married Ted. I think my mom might have married Ted, but I don't think my dad would have been very happy about that. So, but Ted had a way of investing in the market. He had a couple of ideas that he used. Number one, he looked at products and services that were becoming popular. People were using them, and then he would buy those stocks. But his favorite strategy, one that I've used quite a bit, and it really it really works well, especially in a market like we're going through right now, is to buy dividend stocks. and to buy companies who have paid dividends for a long period of time and who have increased those dividends regularly. Any company that can pay dividends for 10 years in a row without a miss is pretty well run. Any company that can increase those dividends for 10 years in a row without a miss is very well run. And then you'll find companies that have done it for 25 years, 50 years, and even more. So companies like that have gone through times similar to what we're going through right now, where a lot of talk about recession, and obviously COVID and other things have impacted the stock market. Basically, the stock market does not like uncertainty. Nobody likes uncertainty. So when those kinds of things happen, if you are going to be in the market, and I still think the market is one of the best places to be over the long haul to create wealth and to create streams of income, if you're going to be there, I think you have to have a strategy that you can believe in. And Ted taught me a strategy of investing in dividend stocks, companies that are increasing their dividends on a regular basis. And from the time he died in 1992 until his wife died in 2016, I watched her live on the dividends from their stock portfolio. And I watched her over that period of time give away almost $700,000 to her church, her charities, and her children. And the game that we played with her was to do enough gifting every year so that she would not have to pay any income taxes on her earnings from her portfolio. And so we had a lot of fun with that. She loved to give. She loved music. She supported the symphony. She supported her church, their music program. She loved to give. And some people said, well, you know, the symphony people are just taking advantage of you because you're giving them money. And yeah, that's probably true, but she was taking advantage of them because in return for the money that she gave, she got friendship and adulation and a lot of fun. So I think this giving thing is kind of a two-way street. So for us, one of the strategies that I love best, and I'd like to talk about a little bit today, is investing for increasing streams of dividend income.
Yes, let's do that.
All right.
Well, one thing I did learn from you, I didn't know that even in a down market like we have, that there are still a lot of companies out there that will give a dividend of some kind, and they have
Right.
That was surprising to me. I didn't know that. I just assumed, because I'm not as versed as you are in the market, that if it's a down market, very little or maybe hardly any companies are doing dividends, and maybe they'll just stay in copacetic. But I've learned differently from you, and I found that very fascinating.
That is, we're moving into a recession. Arguably, we're in a recession, and a recession just simply means people do not perceive that they have as much money to spend. Consumers we get ebullient, and then we get afraid. We run from fear to greed and greed to fear and back again. When people get fearful, they tend to tighten up on their spending. I know I'm the same way. I love Amazon. Oops, I don't know if we can mention their name here, but I love online buying. Let's put it that way. Some people, my wife loves to go to the store. She loves to shop. She loves to touch everything. And she will find something when she goes to the store at the very beginning of her trip. And she'll usually set it aside. And then she'll look at every other store in the mall and then usually come back and buy what she set aside at the beginning. So I call that shopping. Now, me, as a guy, we do not like shopping. We like hunting, which is find it, kill it, bag it, and drag it out in 5 minutes or less. So that's what we like to do. So all of that to say, when things are good, we tend to spend money. But when things are perceived to be bad, we tend to tighten up. So what happens with companies during this period of time? Well, some companies continue to make money. In fact, one of the things that's happening in the marketplace right now is that there are, as you look at the earnings reports, there are many companies that are making a lot of money. And what do they do with that money? Well, if they're in a growth mode, they'll take that money and use it to grow the company. But if they're in a mode where they've done a lot of growth over the years and they have that excess income, they will use it to reward their shareholders with dividend payouts. And companies that have done this for years, and I'm not going to mention any company names, but I will mention, I'll give you an idea of, let's say, a hamburger joint, a particular hamburger joint. One that I worked at when I was a kid, they paid me 80 cents an hour and all I could eat. And within about 2 weeks, they dropped the all I could eat portion of my compensation.
I had a feeling you were going to say that. They dropped the all you can eat part. That's funny.
So this company went public in 1962, and in 1976, they started rewarding their shareholders with dividend payments. And over the last 45, 46 years, they have paid dividends every year without a miss, and they've increased those dividends every year without a miss. So if I go back to 2008, which is one of the last memorable drops in the market before this one, the market went down about almost 48%, 38.2, I think, was the S&P 500. Pretty drastic drop. And during that period of time, a lot of people saw their 401ks go down to 201ks. And some of them younger ones thought, well, I'll just keep working. Mm-hmm. But during that period of time, there was a kind of a gross economic shift, and a lot of companies pulled in their horns and they started letting people go. So now you had a situation where you had a 401k that dropped down to a 201k, and now you're out of a job on top of it. Pretty drastic situation. So what that taught me, and what Ted taught me in the market, is to have a strategy that can work even when the market is down. And Amber, I love what you said about dividends. Very educated people that we work with, very smart people, think that there is a direct correlation between dividend payouts and what's happening in the stock market. Yep. And nothing could be further from the truth.
And I learned that just recently from you. So I'm glad I know you.
Yeah. So if you're investing for dividends, and if your dividends are staying steady or increasing, which many companies are, they're increasing their dividends on a regular basis. And if you are in the accumulation phase of your investment career, where you're trying to build wealth for the future, I think that building income streams for the future is the best that you can do. If you are trying to build growth, that's great, but growth is a fleeting thing. You have it sometimes, and of course, in today's market, we are not seeing a lot of growth. There's some out there, but there's not a lot. I call growth the one-trick pony. So if your portfolio has that one trick and the pony is not performing it, you're not real happy with the pony.
Hey, I'm going to get to that thought in just a second, but right now I'm going to take a quick break. So when I'm walking around my house, I always wear slippers. It's just what I do. And in the wintertime, it's especially needed because it's super cold. And I don't know about you, but bare feet on cold floor just isn't my groove. So let me show you what I do on a regular basis. Okay, so I always buy myself slippers every single Christmas. It's just what I do. And so I got these MyPillow slippers, and they are super comfortable. I am not going anywhere else. From now on, I'm going to get all my slippers from mypillow.com/Amber, and you can save right now, get the lowest price on slippers and save 40% right now. So you can get yourself some if you want something for Christmas, or you have someone in your family that you want to buy for. So make sure you go to mypillow.com/Amber, use promo code Amber, save up to 66% off, and get these slippers at the lowest price ever. They're super comfortable, super comfortable. Hey guys, I want to give you a pro tip to help keep your family healthy when everyone around you is coughing, sniffling, or sneezing, okay? Here's what I want you to do. I want you to go first to drstellamd.com. When you're there, go ahead and grab some COVID bites. Also, get your ivermectin. Set up your telemed appointment and get your ivermectin. I'm going to give you a promo code to help you save some money, and use promo code AMBERMAY, one word, and that will help you save money. Now, here's your pro tip for you. You can use this on your entire family. The adult doses too. I've talked to a medical expert. They said cut it in half when you're dealing with children. So 1 tablet. What I do with my kids, because it's just too big of a pill for them, I get a blender, I put a pill in there, I fill it with water and like some flavoring, and then boom, I have them drink it before school. Pro tip. And what it has, and it's amazing. It has quercetin, vitamin D, vitamin C, zinc, all the therapeutics to help keep your body healthy and working at optimum health. Support your body's immune system when you use the Covivites. They're amazing. So go to drstellamd.com, grab your Covivites, get your ivermectin, use promo code AmberMay, and save some money. You are listening to the Amber May Show, and now we return to the show already in progress.
But if you have a pony that does 2 tricks, it can provide growth, but it also can provide dividend income. Then during times when the 1 trick is not working, the 2nd trick can be working for you. So all of that to say, when companies are paying dividends and we are reinvesting those dividends to prepare for retirement, and the stock market prices are down, level dividends or increasing dividends, buying shares of stock that are temporarily down, that's like a sale at your favorite store, wherever you like to shop. So when the things are on sale, people like to buy more. I like to buy when things are on sale. So in the stock market, if your dividends are buying additional shares, it's a great situation. You can look at your portfolio and you can understand that the value is down this month from where it was last month, certainly down this month from where it was at the beginning of the year. But you can also look at the fact that the number of shares that you own is growing on a regular basis. And also the amount of income that those shares can produce is growing on a regular basis. So you just have to have something in when you're investing to be happy about.
So what do you say to the people who we're in the down market and they want to retire? What do you say to those clients that are like, now what do I do?
Well, if they want to retire, I ask them, and actually we have a program for showing this, what your retirement income can look like based on your spending now as adjusted for inflation in the future. And then we just look at, if you say, for example, I want to retire at age 52. I have people, the younger people, they all want to retire at age 52. Well, that's great, but where's the money going to come from? There will be no Social Security at age 52. You might have a pension from someplace, that would be helpful. But if you don't have a pension, or if you don't have Social Security benefits, where's the money going to come from? Well, a lot of people think that they're going to invest in the market, or they're going to invest in cryptocurrencies, and they're going to have this huge windfall, and then they'll be able to retire. Well, we had a client that invested in cryptocurrencies, actually took his money out of his portfolio, invested in cryptocurrencies, and happened to pick one that did very well and became a millionaire. I don't know what he did with the cryptocurrencies, but if he kept them in that particular crypto, there was a huge retraction, and he might have been a millionaire for a short period of time, but if he kept the money in the cryptos, he's not a millionaire anymore. So what I would say to someone, if you're going to save money for retirement, and if you're working right now, you have a paycheck coming in, and you know that you can base your monthly expenses on that paycheck or on that income that you're getting. So why not look at your portfolio in the same way? Instead of just trying to amass some huge amount of money, $1 million, $2 million, $5 million, whatever the amount is that you think that you'd like to have, instead of doing that, why not focus on building predictable streams of future increasing income?
And what kind of streams are we talking about here? Like, people understand the stock market, people understand a 401k, an IRA, and then that's pretty much what people understand as a stream of income. And you're saying multiple streams of income. What does that look like?
Well, multiple streams of income will just be using multiple stocks and other securities that are distributing income on a regular basis, and doing that where historically there have been increases in that income. When we look into the future, we really don't know what the future holds. I mean, God knows what the future is, but he does not write an investment newsletter that I'm aware of. If he did, I'd buy it. So, certain things about the future we don't know, but we can learn from the past. In fact, one of my favorite sayings is that the one thing that we learn from history is that we do not seem to learn from history.
That's
but
true.
History tends to repeat itself. And if you look at the stock market, about the only thing that we can talk about is historical performance. However, we can't make guarantees unless we don't want to, keep our licenses anymore. So the one caveat that we always have to put out there is that past performance is no guarantee or even indication of future results. However, if a stock has never performed well, and I'm going to be led to believe that somehow it's going to rise out of the ashes and be this terrific booming stock in the future, I have to have some faith there that's going to happen for some reason. But if I look at a stock, for example, and I don't want to name names, but if you were going to do some home remodeling, there's two places that you would go in town to buy the things that you would need for the remodeling. One of them is pretty well known. The other is maybe not as well known. It doesn't jump up into people's minds right away. But the second company, the one that's not so well known, has actually paid dividends for 60 years without a miss, and has increased those dividends for 60 years without a miss. Over the last 20 years, the rate of increase in the dividends has been about 24% per year. And last year, the dividend went up 31%. So if you have a company that's been able to perform like that over a long period of time, I would be willing to give them a shot and see if they're going to continue to do it or not.
So what do you say to the people who want to pull their money out of the stock market right now because they see their 401k, their IRA just dropping? What would your recommendation to them be?
Well, if you're in a 401k, most of your choices in the 401k are usually centered around growth. And if you're younger, again, based on past experience in the market, markets come back. So if you're a younger person and you only have growth-oriented stocks available in your 401k, I would probably stick with the larger company stocks, or get a diversified portfolio and just stick with it, just kind of gut it out. But if you're in a position where you can have some control over your own investments, then I would use the dividend approach.
Okay.
So sometimes in your 401k, once you reach age 59 and a half in most 401ks, they will let you take the money out and put it into a self-directed IRA without leaving the program. In other words, you can remain as an employee in the 401k program. You can keep making contributions to the 401k, but you can take a large portion of the money that's in the 401k now and move it into a self-directed IRA and choose what investments you want to purchase within that IRA. So what I say to people is this: if they're in a dividend program like we like to use, and they come in and they're distraught, I will get out their investment statement and I'll make them read it with me. And when you read the investment statement, at first it's going to show you what you own, what particular stock or security you own, and then the number of shares that you own in it, and the price per share as of the date of that statement. Then it'll usually tell you what you paid for the security versus what it's worth right now. In the next column, you'll see a number that either has brackets around it or no brackets. If there's no brackets, you have a gain in the security from what you paid for it, a gain in the price. If there's brackets, it's a loss, and it's what's called an unrealized loss, meaning that unless you sell, the loss is just a paper loss. Then usually there will be a column that shows what percentage that asset is of your portfolio, and then the current yield on that investment. and the amount of income that it's expected to generate for the year. So what I show them is I go back to the number of shares that they own. And when I buy shares, I'm pretty anal, so I would never buy, for example, in a portfolio, 261.3739 shares. This is not going to happen. I would buy 250 shares. So if we look at the client's statement, then they have 262 point whatever the number was shares. I know for a fact that we are reinvesting the dividends to build the shares in that portfolio. So what I can tell the client is this: look, I know the market is down right now. I know it's a lot more fun coming in here. And honestly, it's a lot more fun for me to have you here when the market is up than when the market is down. But I don't want you to despair, because your portfolio is actually making forward progress right now. You are adding to the number of shares that you own, and each share that you own produces increasing dividends. So your portfolio is actually working harder for you during this period of time than it would be working for you when the market is up.
That's pretty good. Can you give us an idea of what the past has been like for the market?
Yes, let's go back to my favorite burger stock, to the year 2008. The market's down 40%. Big companies like Shearson Lehman, who's been around for 150 years, suddenly going out of business. The government is being asked to bail out companies left and right. Things are looking pretty bleak. Well, at that time, my favorite burger stock was $50 a share. And if you had $100,000, you could have bought 2,000 shares of that stock. And each share was paying a dividend of $1.50. So if you had 2,000 shares, each one paying a dividend of $1.50, that means your dividend income for that year was $3,000. Fast forward to today, when the market is, chaotic, just, at best, it's upside down, inside out, and trying to find right side out. But that burger stock today, the price per share is over $250. It's actually about $260, even with the market crazy. Well, $250 a share is 5 times as much as what the share price was worth back in 2008.
Whoa.
So your $100,000 portfolio back then is now over $500,000 today.
Whoa.
Even with the market going wonky, which it is. But the big story is the dividends, because the dividends per share now is over $5. So 2,000 shares with a $5 dividend is $10,000 a year of income.
Wow.
As opposed to 3,000. So now the yield on your original $100,000 investment back in 2008 is over 10% per year and growing every year.
Wow. Wow, that's incredible. You sound like a very intelligent person, someone who knows what they're talking about. So if one of my listeners or viewers wants to get a hold of you, sit down, see if they're financially sound to retire, because you said you had this really great program, or to have you look over their portfolio, is what is the best way for them to reach you?
Well, if I can give a phone number out, probably the best thing to do is call our office. The phone number is 623-537-3657.
53756. What is it again?
623-537-3657.
657. Okay. Perfect. Do you also have a website for your business?
We have a website. It's called iloveeps.com.
iloveeps.com. I'm going to put all that information in the show notes. So if somebody listening is concerned about their retirement ability, or they're nervous about the loss in the market, I'm going to have them reach out to you, and then you can have a consultation with them and see if you're a good fit and you can help them out. Because it's been an honor knowing you and your wealth of information. So I hope that the viewers and listeners will reach out to you if they have any questions about the market.
Well, I appreciate that. And I don't know that, I think there's a lot of smart people out there doing what I do. I'm just one that likes to see something that works. When
Mhm.
clients come into the office, and very honestly, we haven't had a lot of clients that have called in because we've schooled them. I've told them about this probably until they're blue in the face. But I keep saying the same thing to them over and over and over again. The reason I say it to them is because it's true and it works. I'm the hardest sell there is. If I'm going to do a strategy or do something, I've got to be convinced that it works. And if I'm convinced, then it's easier for me to convince others.
Well, thank you so much for making time out of your schedule to come on the program. I know you're a busy man. You're helping a lot of people out there building wealth and retirement. So thank you so much for joining me on the program today.
Well, thank you for allowing me to be here. I really appreciate you, Amber.
Yeah, it was
You're doing
really
a great
fun.
job.
Thank you. And I can't wait to have you back next month. I'd like to have you on monthly so you can think of other ways you can educate our listening audience on how to build wealth. There's not a lot of places out there, so I want my show to be a resource for people.
Well, I think would be nice if your viewers would maybe send you some questions or some concerns, what they're thinking about, and we could address some of those.
Yeah,
That'd be a lot of fun.
Yeah, so you can always reach out to me at theambermayshow.com. There's a contact me button there, or you can reach them at iloveeps.com. Thank you so much. We'll have you on next month.
Have a great day.
All right, take care.
Bye-bye.
Let me ask you a question. Do you like coffee? And do you want to lose some weight? You never know when baby season's here. And what about the holidays? After the holiday pounds, we all know that the holiday pounds. Let's nick the holiday pounds. Summer quickly approaches. It's here before we know it. And then we haven't hit our weight loss goals. So let me tell you about this amazing coffee. And if I say that, it's a big deal because I don't like coffee, but this coffee is really good tasting, really delicious. It's called Java and it's from My Infinity. So if you go to ambermay.myinfinity.com, the links are in the description. You can get a coffee that tastes amazing and will help you lose weight at the same time. It's incredible. So make sure you click the link below in the description or go to ambermay.myinfinity.com right now and get the Java. Get it now, start losing weight, and get your coffee that tastes amazing. So what's there to lose? Oh yeah, just the weight. ambermay.myinfinity.com.
It's because of a mutual friend of ours that I was actually connected with you. Michael, the artist, the Commander's artist, he's a friend of yours and he's done some work for you. He's designed the logos on this show. And the Commander's artist he's a great guy, isn't he? He speaks very highly of you.
Yeah, Michael is a terrific American patriot. And if anybody, I hope that you will promote his website and him. He does the artwork that he does is very, very patriotic. And one of my sort of big, big things with Michael is Michael came into my life through this political persecution journey that my family and I went through. And he stepped up in a big way to help us raise some money for our legal defense. And Michael and I have become very good friends, and he's a terrific, faithful man, and I love him.
The information provided in this commentary is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or offer or to sell a security. It does not take into consideration any investor's particular investment objectives, strategies, tax statuses, or investment horizons. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. This commentary may contain statements that may be deemed forward-looking statements. Please note that any such statements are not guaranteed of any future performance, and actual results or developments may differ materially than those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. Performance targets are estimates based on certain assumptions and analysis made by the investor. There's no guarantee that these estimates will be achieved. Diversification does not ensure a profit or guarantee against loss. Past performance is not indicative of future results, which could differ substantially. No investment strategy or risk management techniques can guarantee returns or eliminate risk in any market environment. All investments should include a risk of loss that clients should be prepared to bear. The principal risk of EPS RIA LLC strategies are disclosed in the publicly available Form ADV Part 2A. EPS RIA LLC, EPS Wealth Management, is registered investment advisor. Advisory services are only offered to clients, to prospective clients, where EPS Wealth Management and its representatives are properly licensed or exempt from licensure. For current EPS Wealth Management information, please visit the Investment Advisor Public Disclosure website at advisorinfo.sec.gov by searching with EPS Wealth Management CRD number 158468. For additional information, please visit our website at epswealthmanagement.com.